Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. We have a lot to talk about. It's been pretty darn interesting in the markets, and we're going to get into it as soon as possible. I do have a couple of important announcements for you, and whether or not you are a Bookmap subscriber, there is something here for you, and also a lot more. So I'm going to get into that, but first of all, I'm going to just to let you know, this is the Trader Lab. The Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. And this stream's based on using a high-tier order flow tool, Bookmap, to see inside participant behavior. In addition, it is based on not only auction market theory and order flow, but we use a chassis of the volume profile to align with participant behavior. The other aspect of this stream's focused on helping traders, retail traders, build out the business of trading, understanding what this business is versus what many of us, when we come into the business, imagine it is. It is very much a gaming business, and that means it's really a statistically based business in a random environment. Most retail traders spend their energy trying to predict what's going to happen next, and the reality of it, at least based on my experience, is you can't predict anything because there's too many variables that come into the market. News reports, events, it doesn't matter what it is. Other participants who take the other side of your trade, algos, whatever, a bank, whatever can happen does happen. And that's why this is random. So instead of focusing on predicting with the need to be right, it's really more focusing on where a statistical probability that favors you shows up. And then over time, when that condition shows up because it has a statistical edge that you have vetted and it's part of a vetted trade plan, you show up, you take your trade, and either it works for you or it doesn't. Same as the casinos. They play structured games. They play them the same way. They don't make them up. All the work was done in vetting those games before they ever put the table out there for, let's say, blackjack, and then they just play the games. The cards coming out of the deck are random. Gamblers play the cards randomly. They have no control over anything other than what they do. We are the same. We have structured trades. This is what the Trader Lab is based on. We interact with the other participants. And if we have the discipline to follow a plan that we've done outside of trading hours and then execute that plan, assuming it has an edge, and you have the ability to follow the plan and not deviate from it because of your emotional triggers, you have the same opportunity, in my opinion, to establish a business. If that's something you're interested in, then the Trader Lab's for you. Okay, now, don't forget, I have an important announcement for you. I'm going to get going right now. And please post your questions on YouTube. I'll do my best to get back to them. I take breaks here for try to focus on your questions, and I hope you're all hearing me and seeing me. How we doing in YouTube? There's no audio in YouTube, is that correct? Let me take care of this. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only. Thanks, bear in mind. And should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. One moment, please. By the way, if you, well, I was going to say, if you can't hear me on YouTube, uh, try, refreshing it. But then, of course, you can't hear me. Please grab a pen and a piece of paper. I'm going to give you some statistics, and then we're going to go from there. The other part of this is, hold on. Okay, here's what's going on here, and this is pretty darn important, and you're all invited. This is only taking place exclusively in the Bookmap Discord community. Uh, there's a link in the bottom of YouTube if you're interested in this. October 21st to 25th, next week, we're going to have a institutional trader series. This is where you have an opportunity to get some insights from a different angle. Scott Pulcini, who you may know, was a prop trader. He was a high volume trader. He streams in the Bookmap Discord server once a week. Al V, hedge fund manager, quant, rocket scientist. You'll find him interesting. Brad Gilbert, bank trader. Robert Rother also streams in the Bookmap server, and many others. So you're not going to want to miss this. It's in the special events, and you'll see the scheduling. Now, there's more. Really, there's more. Yes, there is. How would you like to participate in a trading competition? The trading competition, hold on one second, let me make sure I got this right. The trading, and you can go to CME competition. It's going to be in sim, and you can trade $1 million in sim. Now, there's prizes involved, and don't quote me on this because I don't have the information right at my fingertips. First of all, it's 100% free. There's no purchase. There's no payment. Nada. What you need to do is to participate, you need to install and activate Bookmap for desktop. There's a link in the bottom of YouTube. There's no cost to do this. But let's think about this. I believe, and you're going to have to confirm this, that the first prize is 1 year of Global Plus, 1 year of the MBO bundle, which is stocks, options, and all the bells and whistles. Remember, Global Plus, you can execute off the platform, and $1,000 cash prize. Now, don't hold me to that because I don't have the data in front of me, but I was looking at it this morning. That's available to all of you. Now, here's the other part. If you become a Bookmap subscriber, you're going to have access to the new multi-account add-on. Might this be something that we've been discussing with the developers for those of you who use funded programs where you'll be able, and I'm not saying it is, I'm saying it might be, a new Market Pulse web, a new heat map, and a lot more. There's the Blue Jacket. The Blue Jacket is a competition that's held every month by subscribers who participate in the Bookmap Academy. Now, the Bookmap Academy is coaching and mentoring, and it's specifically for subscribers only. But here's something for you. If you get the digital version, doesn't that make you a subscriber? Just saying. And again, all these subscription-based processes, subscription-only streams and education are available to all of you at no cost, assuming you're a subscriber, and you can become a subscriber at no cost. It's kind of interesting to me. So that's the important announcements. Now let's get on to today. And remember, if you have questions, please post them. Now let's look into today. Now, if we think about today, we have to look at yesterday, because everything we do is based on what happened in yesterday's RTH and also today's ETH, and then today. So I'm coming back to the RTH Open. I'm going to point out some statistics to you and structured trades. Now, when I talk about a structured trade, I'm talking there's 60 PDFs of these trades that are available to you at no cost in the Bookmap Discord Trader Lab community. You can download them. And if you're following the stream, you've seen these probably a dozen times. And if you haven't seen them, you're all invited, and there's no cost to come to Bookmap Discord Trader Lab community, and there's a link in the bottom of YouTube. So let's go over some statistics. Yesterday's low, if you remember, our target for yesterday was pretty much the low of the day. And that was yesterday's low. And the actual target, I think, was around 85.50, 86, something like that. And that turned out to be the low of the day. And if you followed the stream, yeah, That's what it did. So who knows, right? And by the way, I'll never claim, and nobody who actually is legitimate in this business is going to ever say they know what's going to happen. What we do know, based on how the market works, is what might happen. That's the best you got. So if you're trying to predict, I think you're putting your energy in the wrong place because remember, participant behavior is random. This was a key location. So, and the market is short from yesterday. Write that down. Here's another thing to write down. The market goes up to go down, and the market goes down to go up. And every time I say this, I'm always thinking, you guys are probably thinking I'm crazy. But what it is market mechanics. When the market gets one-sided, think about it. If the market's short yesterday, what's in the market? Shorts. What else? Buy stops on top of those sellers. Now, if we open the day and we go lower, we get new shorts, don't we? What's above those shorts? Buy stops. What's above the shorts from yesterday? Buy stops. So that I call that fuel. Now, nobody can predict the timing or if any of this will happen. That's just part of the joy of this whole thing. So, one moment here. I'm still watching the market. Sorry. So, here's some statistics. We are opening higher inside of yesterday's range. So, yesterday's high is here, all-time high. Yesterday's low is here. RTH open is there. So, settlement's there. So, higher inside of range. Okay? That's the first piece. When you open higher inside a range, grab your pen and paper. I'm going to give you a couple statistics, and past performance is never indicative of future results. It is all random. Write that down too. Random. Who knows? So don't worry about knowing. You can't know. Here's the statistics. There is and you got to vet these for yourself. And the fact there's a statistic doesn't mean that the market won't do the exact opposite. So it's just a guide. The first hour's high or low, there's a 97% probability we'll take it out. That's called the IB. So there's the IB low, there's the IB high. Okay. The overnight volume, hold on, there's one more. The overnight high or low, a 93% probability. The ETH high is there. So that makes it a target if we're going up. If we're going south of the border, the overnight low is below yesterday's low. And there's more. The previous high or low, an 81% probability. So when we were working the shorts this morning, this was a potential target to get the low out, get more shorts in here, and then squeeze them. So in the morning, Trader Lab, subject to your plan, not my plan, and it's all you, it's not me. Subject to your plan, it was shorts. Then this was a big area in our target from yesterday. So the idea was tag settlement, tag yesterday's low, test this, and come back inside. But this is support. Now, the support is not a wall, it's an area. So I just want you to understand that. So we had the problem, and this was open, but this was primary target coming down. And there's other targets. So let's keep going. Previous close, about a 69% probability. So you're getting the idea. Overnight high, a 69% probability. And let's see what else. Taking out the first hour's high, I think I told you that one, about a 68% probability. And so the lean is taking this out versus taking yesterday's high out. And let's go into of course, however, we're in a bull market. However, the longs that were in this market got thrown under the bus yesterday, and we got shorts. Now the shorts potentially get thrown under the bus, and anything is possible. And we have a high probability, don't forget, of taking out either yesterday's high or low. This is before the market opens. And if you're not prepared for the market, then you're making it up as you go. Now, the market is random. Something needs to be anchored. That's how the casinos operate. They only play games that have a statistical edge. In our business, we don't know who's going to take control. But I'm going to show you one other little piece. Now, I'm going to go before the RTH open. This is why you got to have a holistic, if you will, view. This is the highest volume price from yesterday, called a volume point of control. And because it hasn't been tested in the RTH, it's called a naked volume point of control. This. So we have a high probability of testing it. However, in the ETH, we come up before the RTH open. We put in our ETH high, and look what happens here. Sellers. So what is that saying? At the moment, this might be too high. There's our ETH high, and we reject it. Now, I'm going to draw a little line here. Now, what I'm going to do is take you down into, I'm in multiple time frames as you think of them. And if you're not familiar with this, don't worry about it. This is different, probably, than most other things you have seen in your trading career. And then again, there's a lot of similarities. It's just how you define the behavior. There's not a right or wrong component to anything. What we're trying to accomplish as traders is consistency and something that we can codify and see if it has an edge. What we know is this was too high yesterday, which is why we left it. And this was the settlement. So if this is too high yesterday, is it reasonable the market might come back to check it? Think of this as shopping. Trading is shopping. It is shopping. We are trying to find out, or the participants are, what's too high, what's too low. If you go to the store, think like a shopper, and the price is too high, and it was too high yesterday, because we settled down here, if we come up and check it, and it's still too high, the shoppers are going to go, nah, I'm not paying that, and they leave the store. So here, now remember yesterday, this was too low. They left the store. So I have support here. I have resistance here. This sets up the possibility of getting short. Now, RTH open. This is all, now here's the RTH open. Now I'm going to talk to you about structured trades in the trader line. And you have, these are all available to you. There's 60 PDFs. If you're in YouTube, and even if you're visiting in Discord in the Trader Lab, be sure to download 60 PDFs of these trades so you can reverse engineer them, see where they might fit, and then see if you can derive a statistical edge. And there's a lot of support in Trader Lab, a library of webinars, etc. Let's go. So the market opens. Lovely. This is the overnight volume point of control. What is this? This is the same as that. This is yesterday's high volume price. I'm not paying that. That's what the shoppers said. And then what's the high volume in the ETH? It's right here. This is retail in the ETH, the last auction, before the RTH open. So I have too high up here, and I have, if I'm under this, possibly this is too high. So I'm looking for this out here, maybe up here. We'll see. One moment. I did a webinar on this process here. It's called VPOC migration. It's a specific webinar to understand transitions in behavior and how we can read the market. Since I don't use indicators, I'm basically translating behavior, because if I can understand what this says, I might, underline, be able to participate and interact much quicker than those who are with lagging indicators and potentially in conflict. I mean, if the trend is up and then yesterday it was short and now we open higher, are you getting long? Are you getting short? How do you know? Well, first of all, we don't know what the market will do, so we need to have structured trades. And because we understand the auction in the Trader Lab, we also have an inclination of what might happen here. So up here, I know this is too high in the ETH, and I know this is the retail price in the RTH. I'm sorry, ETH. Whoop. RTH open, which is here. I see my buyers going to the moon, right? Let's watch. Now what? Sellers take over here. Now, I don't know if we're just going to come here, take out the top, right? You know? I don't. So I don't try to know. What I try to do is put together these pieces. The pieces are too high ETH high, which is a high probability target, and now it's who takes control. And remember, the possibility is to come down and check this low, high probability. So, right? That's why I give you these statistics. Now let's look. Market breaks down. Here, no clue. I am the clueless. Not ignorant, clueless. So I know what's too high, maybe, and now this is my next retail price from the last auction. This is yesterday's auction, too high. This is the current ETH that just finished, so this is now the retail price. This retail price is lower than that retail price. And coming back in the other direction, the other retail price that was too low was here. Okay, yesterday's target on the downside, yesterday's low. Nicely done. Who knew? So now it's too high, maybe, and down below, let's test. Get new shorts and then maybe squeeze. So here's the first trade. Sellers here in the clueless zone. Rotation. VWAP mid. Now I'm going to start labeling. Let's label together. These are called, and I made all this up. I don't think this is done much out now in the world, but I have no idea. Maybe. When I started doing this, it wasn't being done. This is called a variable high volume node. Let's go back to the shopping experience. This is the high volume. When you go to the store and buy something, buyers and sellers agree on a price and it creates volume. This is the idea of the auction. If a price becomes too high and we run out of buyers and there's more volume here, it's a language. It is suggesting that maybe, and remember, write this down in trading, the best you got is maybe, because it's all random and it's uncertain. Maybe that's too high. If it is too high, and now I have more volume here, this migrates, VPOC migration, and it sets up a short watch. This is now the retail price. This price was too high. Now this price is the retail price. Let's just mark it. You're going to see method to madness, I think. And it's not mechanical. The pieces that I discussed, all these, the rationale for the behavior, the statistics, are all part of this trade. This is now too high. That's too high. Let's watch. VWAP in mid, too high. Too high. This is a Trader Lab short here. And this is all narrated in Trader Lab. I don't call trades because you don't need to take my stops. I take them. Don't you? So right here, it's too high, too high. Sellers are in control. Rotation. Passive buyers were here. And where were the sellers? Here and here. So if I come across, it suggests potential test here, mid in VWAP. So what happens here? I come up. Now, my resistance, now I'm going to take you down into shorter time frames. Right here, our buyers. That creates my counter rotation. I'm going to put a little, let me come back over here. I want you to see trading in fractals. What is this? Buyers are here. Now, nobody knows anything. The buyer is here. The sellers were there. This is passive. Sellers, delta saying sellers going to zero. What else do I see? Sell stops, but only 3. That's not much. Why does the market go up here? Buyers. Now, I can't tell until I look at it. Now, chop. This is a consolidation. I am below this consolidation where the sellers are. So I got buyers here, and I got chop. Sellers here, sellers here, sellers here. Micro high volume structure. Let's just watch the structure. The volume is down here. This is a consolidation in a fractal. Now I'm getting into minutia. This is too high. Let's just watch it. Right here, you got your sellers. Buyers try here. They can't get above this. This is your resistance. Here. This becomes resistance. This becomes resistance. This is support. You break below that, it's a short. If you rotate back up, it's a short. So right here is a short. This can be a short. Your stop is here. And then you're into statistics. In overnight mid, let me give you that statistic. I don't think I gave it to you. Where is it? Hold on, guys. 72% probability. So this is your scale or your scale before, subject to you. VPOC migration. I'm not paying that, right? New retail price down below. Let's watch. Now, I did a specific webinar on this several days ago, and it's in the library in the Bookmap Discord Trader Lab community if you're interested in understanding this. And I'm adding other elements to this. It's called trading in fractals. Inside of these little structures is the same behavior. Right here, I'm just going to show, let me show you this one. You see this node sticking out? This is the retail price between these shoppers. Again, just think of it like a shopping experience. So we chop, 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 consolidation. I'm going to draw a little box over it just to give you a little more clarity. And it's basically a consolidation. And what are consolidations? Buyers and sellers are on both sides. One side is going to fold. Where if you got short here, your stop would have to be here. So where do we come back? We break, we test. This is a short in the Trader Lab. Up to you. Your stop would go here. So what you have is short here if you want, short here if you're advanced, short here, here, VPOC migration, new retail price, too high, chop, chop here, consolidation. This high volume in here is the same as that, except this is for fractal. In the developing daily time frame, this now is lower. In the micro fractal going down, think Russian dolls, this now is retail. So I got retail in here the whole day developing. This is the fair price. All this up here is too high. And in the short time frame, this chop is the same thing, but in a fractal, lower time frame. Break low. Where's my high volume? It's there. Short. Stop. Okay, I'm just showing you, okay? Now, off we go. Now, where are we trying to go? Settlement. This is the next target. Now, watch. This is our variable high volume node. This is now our variable high volume node. I'm marking them. What has happened now? What has changed? Do you notice something different? This changes what's called context. Now let's think about this from a few angles. One is, at the moment, the context is down in the developing daily time frame. So that's what this is all about. And we just got to our key level from yesterday, right here. This is where our target was yesterday. I think it was 86.50 actually. So it's right here. And that's why there's a little mark on this. And yesterday's low. So when I was in this trade, I was thinking, well, I know this is important. And this was my primary target. But I was also thinking, if we get down here, I'm actually looking for a long down here. So, but I kind of have a preference that if we come out under yesterday's low, that we'll get more shorts and we'll get potential longs out under yesterday's low. And then we'll have more sellers. We have breakout traders, so they sell, the low, and then their buy stops are going to be here, and then all the shorts in this leg. Remember my plan at the top of the stream. If I see the sellers, I want to get them more shorts in the market so the market can go up to go down and goes down to go up. So anyway, when we cross over, this changes the condition. The condition becomes something called potentially mean reversion. Now, mean reversion is, you'll notice now it changes. The VPOC, the retail price, has been moving down, 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 down. And now we cross over it. Notice on the way down, we were just going down. We weren't getting back above it. Now we cross above it. As soon as this happens, that suggests change. It doesn't mean, to me at least, that this is the low of the day. It means that now we are transitioning. And I need to now look at resistance. What was too high before? This, right? This is the retail price. This is my resistance. That's my last short. The other thing I know is stops are above this swing, stops are above the VWAP, stops are above the mid. So for me, there's no long. Other traders in Trader Lab got long. That's why there isn't a right or wrong way to do anything. It's just what happens over a large sample size where you have your edge. So what do I know about this? It was too high. So in mean reversion, the possibility, and this is all you got in trading, the possibility is rotational trading, a change. So where, if I'm thinking, and a minute, thinking means maybe this is too high, and maybe this is still too high, and maybe I can come across the range and take out the opening swing high and, lambaste everybody. So what was too high? This is the variable high volume node. Now let's look. I'm going to put a line here just so we can see it. I want you to see how you can anticipate locations. Trading, at least what I have found for me, I can't predict, but I can understand the language of the market and why behavior took place as I define it. And I define behavior by what the participants do and the shopping experience. This was too high. So what happens here? I test it. I see sellers. If I took a short here, all right, what would happen here is my little support is over here. I would take a stop. I'm just telling you, no big deal. Where's my next location? It is here. Let me put a little line there. And by the way, do you take stops? I do. So if I took this short because it's resistance, my stop would be up here. So here's how this would work. Chop, chop, break high, break low. In here is high volume. I'm going it down in a fractal again. So this sets up the short trigger. This is the microstructure to lean on. So what would happen here is if we come back here, you're looking for rejection of this. This in a fractal is the same as that, which is higher time frame. So this is a more microstructure. And what you're seeing here is a consolidation. And that, so you got your buy stops would be up here and your retracement would be your entry. So let's see if we get an entry actually. We did not get an entry here. So here's what happens. But let's assume you did. You just put an order here and resistance is this, remember? So if you took this trade here, resistance is this, not this, this. So if you took this short here, this is the next level. So I always kind of think about it like, well, the nice thing would be, if there is such a thing, this would be your entry and your stop would be here. You take a stop. What I try to do is look above it for where a price was rejected, not just the swing. And this is subject to your plan. So if you got stopped out here, if it was me and I see this and I get another trigger and now I have high volume sitting over here, microstructure, and my consolidation now is here. I'm going to draw this so just you see structure. Okay, let's see what it looks like. Right here, chop, this is the bottom of the consolidation. Break low out of this right here. So these are triggers. Test. So this is a short with a stop here or up here, or short, volume is here. And this is the ideal location. But let's say you got short on this break back to here. You're now leaning on this, and this is compound fractals. It's complex if you're not familiar with it. and your stop is here, and your target is here. Going to be a hair off, but it'll be okay. Here, let's do it right. Variable high volume node. So what is this? This is now too low. Well, if this becomes too high, I can come back here. Let's look. Target. Now this is too high over here. So what you're seeing now is the auction. And where am I trying to go? I'm trying to take out the low of the day. Let's see where we come back. Variable high volume node. Same thing, same trade. Takes the stops, and nobody knows. And where do we come back? Overnight volume point of control. That's the retail price from the ETH. And by the way, it is all random, and all we can do is try to get in alignment, scale to get risk neutral, and then target. That's all you got, in my opinion. Again, the buyers are here. Nobody knows. And it looks like we're going to the moon. If you're in Trader Lab, you know this is important. So right here, bang, 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 nothing, right? Micro high volume is there. I'm going to put a little box around it. It's a consolidation. When I'm looking at volume profile, which is what this is, what you're really seeing is when you see a consolidation, it looks like this in volume. All it is you ran out of buyers up here. There's the aggressors, which are buy stops, who stops are market orders, and initiators. The passive side is over here, which we don't know until we see this. Once we break, if it rotates back, we have another short. Let's look. Variable high volume node is here. So here, variable high volume node, possible short. If you don't have an entry, you just don't take the trade. And where do we come? Back to this one. So what this is here, when you look at this, now there's nothing here now because the VHVN is up here. So you'll notice the buying. Well, I don't see a reason to sell here. Variable high volume node is here, going through it. Variable, I should say HVN is here, variable high volume node is here. So as it's coming up, there's nothing here to do. It's buyer, buyer, buyer. Here, where's my buyer? Here's my seller. Change in behavior. Notice the change, the rotation. Now the micro high volume structure is there in alignment with this and this. So I have an area. Now I have a trigger. Now I have a pullback. And I can get short against this, and my stop is over here. This is my target for scaling, and then again, looking for it to come out the bottom. No bueno. Get scratched. Okay? So here to here, and then you're looking for it to take the buyers out down here. That's the objective of the trade. So you get risk neutral, and then you get taken out of the trade. So let's watch. Oh, there's one other thing I got to show you. Okay, right here. So that was the end of the shorts. Now, I got to show you another structured trade. And this was narrated, I narrated this in Trader Lab, but I have to get back to when this actually happened. This is Trader Map Lite, and what it is, I think it's right. Hold on. This is important because this is a structured trade. This here, 5,900, I pointed out we had this stacked liquidity here. And you know, 5,900 is a strike price. We have statistics open above. We have the first hour's high. I'm sorry, it's not on this chart. I'm only showing you the liquidity here. I'll get back to the other chart. So right here is the 5,900, and right here we break through it. Okay, the buyers are here. and there's your absorption. So the sellers are here. Some of these guys pull, and they're selling icebergs here. They get run over. So 5,900 becomes support. And I posted in TraderLab, observe 5,900. Now, everybody in TraderLab, if they've done, subject to them having their trade plan, this is a long. Now we're looking for the pullback against this for long. And let's watch. Now, where's the micro high volume structure? Let's just look at this. And then I'm going to get back to the other chart, but I want you to see the structure. We have the structure here, but I can't have all the other stuff on this chart. There's your micro high volume structure. Here's the breakout. This is your trigger. This sets up the retracement to here for the long, and that's your long. Let's just watch it. Support, 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 north. Let's see if it goes north. And it did, and now we're below it. So now I'm going to come back to 1012. I want you to see what the targeting now. So now you can I want you to see this now with the stats included, how you put the pieces together. So 1012 was where that happened. It was here. Yeah, this. So this is, now this has a algo bracketing it. So that's why I showed you on the other one. But this is where that happened, 5,900. And this is where that support is, right here. So I pull back to the support after this. This is a structured trigger. And what do we have? Over a 90% probability to take this out, about a 70% probability to get here, and over a 90-ish% probability to take this out and maybe go higher or not, right? So that's a long. So now you're looking for the initial balance high. Remember, taking out the first hour's higher low, 97%-ish probability. You have to vet that for yourself. Taking out either the overnight higher low, a 93% probability. Past performance, not indicative future results. And about an 82% probability to take out either yesterday's high or low. So initially on the shorts, I was looking for yesterday's low. No bueno. Now you turn the bus around, and depending on your individual plan, for me, I didn't turn the bus around until this, because I was on my last trade. I was just taking the mean reversions. So it doesn't matter. You can be long. See, the thing about TraderLab is you could be on the long side, leaning on a higher time frame, which was this, right? Yesterday's target and all that. With yesterday's low underneath, I was short going for this to come back. So I was going to go long down here. That's all. So once it came, and until it did that for me and shifted, I was just playing the short side. I don't play both sides. I try to stay with the dominant side. And then when the context changes, it's like turning a barge around. I then reconfigure. So this is my long, and then my statistics support this and that, and wherever. Maybe take out yesterday's high. Maybe still take out yesterday's low. Maybe none of the above. Maybe we have an inside day, right? All those are possible. So here, so that's the long and scale, and then going for the ETH high. Actually, there's a couple targets. This is the next target. This is the retail price from yesterday. If it's too high, we can reject it. And then the ETH this high. Okay. So what happened is 2 out of 3, and then out of the runner for this, and maybe higher. So that trade didn't do too bad. It got 2 out of 3. If you're running a 2 lot, and I always say in TraderLab, you take the targets in sequence, this, and then, or subject to how you handle yourself, you could skip this and go for that. And then when you get this trade is going to the happy hunting ground. What else do we know here? Now let's look. Now this is going to be in hindsight. This is too high. No way to know until you know, right? So let's forget about predicting. In the auction, we know what it means. We don't know what will happen. That I can promise you. Can't promise you much else. So if we find out that the sellers are here, the buyers got stuffed, buy stops, selling icebergs, and no way to know, For all we know, it's just going to keep going, right? There's the change in behavior. Now, this might be, and that's all I ever know about it, maybe, and that's the word, write that down, maybe let me try to get this lined up right, is too high. So in this structure here and here, in alignment with that, this is too high. And you won't know until after the fact. So now what I know is if I come inside here, we have another structured trade in Trader Lab, and these are pretty popular. I mean, there's a lot of these structured trades are pretty cool once you understand market mechanics, and most traders don't understand market mechanics. They've kind of offloaded that to indicators to define the market. In Trader Lab, what we do is we let the auction tell us, because the reason we have a market is to try to determine pricing. That's really what it is. What's too high, what's too low. Well, if this price is too high, from yesterday at the moment, and we reject it, then it sets us on a path to come back here. So the next trade, once we fall back inside, it sets up something called the IBF, IB failure. So we have location, too high, disappointed here, life in the fast lane, sellers take over. This is called the IBF. It's a short mean reversion trade. And earlier in the Trader Lab, I did post, I say, we have these possibilities. We can come out the bottom, we can come back, possibility exists to come out the top, and then come back inside. It's called mean reversion. Now, when I say possibilities, that's not a prediction. It's a trade plan condition. In other words, if it does this, then I do that. If it doesn't do this, I do something else or I do nothing. And it's almost like branch logic. So when the conditions change, certain trades are qualified. In other conditions, they are not. So the directional move down was one kind of trade plan. When we came across and went into two-sided trade, different trade plan. Then when it transitions out from that 59, longs, different trade plan. Then when we fail over here at the time, different trade plan. Back inside trade plan, mean reversion. This is the short in the Trader Lab. This is called IBF. And what it is break, test, too high. This is the outside edge of a consolidation. Here or here. You can just draw it. It's all ballpark. Support was here. Resistance is here. And resistance is here. So I break, I come back, and what's this? Micro structure. Let's put a little line on it. I'm just helping you see it. Watch. Too high, seller. So what do I got? Too high, passive side here. Sellers. Uh-oh, trouble. Come back here. Location, location. Think real estate. Same as that. Think real estate. Too high. This is your short. Seller here. Where's the volume? It is here in the fractal. Right here is a short. Stop over here, or even stop over here. Pretty aggressive though. Pull back over here. This is your resistance. What's this? Micro high volume. Now this is fractal. Think Matryoshka dolls. You can get down as tight as you want with this, but there's more noise. You guys know this yourselves. If you're using a 1 second tick chart, you're going to have a lot of noise, right? How can you see anything with that? Well, when we go down in time frame here, I can read this, but it's easy if there's stops being trailed here for the market just to pop, take out the stops, and then exhaust and get the passive side, you see. So structure as you get shorter in time frame becomes weaker. But because I have a structured trade here called the IB failure, which is a break below pullback, and if I can't come back outside, and remember I'm below this now, that sets up mean reversion, and you're looking to come VWAP mid and back to this. That's the trade. Let's see what it's doing. VPOC migration. So now I got to label this, And it puts this trade in jeopardy. And I'll tell you why. Because let's stay with the auction. Now, by jeopardy, it means here's why. This is too low. Now, this is retail. So the possibility is, if this is too low, two possibilities. I can come back here and check it, be sure it's too low, or I don't get there and I just get maybe the VWAP or mid and then mean revert and come out the top. That's the possibility. So let's see. Well, there you go. Okay. So that's because here's what this is now. This is a mean reversion trade to come back to the mid, the VWAP in here. When this shifts up, it is suggesting that is too low and possibly we're going to come across its mean reversion. This is the same trade as this is, mean reversion, but the mean changed. So now if this is the mean, but this was my target, now my target is moved, you see? So this trade has a problem. Now there's another piece. And stops are sitting here. If I come out here, I still have this target. If I can't get back above here, then I can come back here. So I have two possibilities. So for me, if I take a short here, I'd be out of the short. I would not necessarily be long. I'd just be in park. I do have to be conscious that I have a high probability of taking this out, and I have a high probability of taking out either yesterday's high or low. There's also another possibility I can get here. So that's it. You know, there's not much more to this, at least for me. What I have found is patience and alignment and trying to catch the larger rotations. If I try to trade this stuff, I'm taking the same risk here as I do when I'm trading in here to go to here. If I'm getting in here to go up here, or it was 59, I think it was, right? The last long, I'm going to here. If I take a stop, my risk reward on my rotations pays for my stops and gives me the opportunity to have a profitable day. If I start playing scalpateria, I'm taking a very similar risk. My risk runs 2 to 3 points, subject to, you know, my ability to be timely, and that takes unconscious competence. But if I'm taking almost an equivalent risk, and a lot of retail traders think that that's what trading is, because it's about, for them, they think it is profitability, not profits. But I've got if I go for a shorter target, I'm going to get it more often than not. Well, if you're risking almost the same amount, then you're not going to come out, probably, with costs and everything else over time. I've done it. I was a high volume trader years ago, 100 trades a day, that kind of thing. Been there, done that. My broker, I'm telling you, my broker, when is your broker showing up with gifts? Because if 25% of my gains were cost, and then when I had a losing day, I had to add 25%. My broker was my partner, but he always had a winning day. So over time, even though I'd have big winning days, when the dust would settle, because everybody has losing days, it just didn't make sense. And then I had to choose to either get a seat, and I came very close to getting a seat down at the Merc, or change my time frame. And I figured it'd be easier on me cognitively, emotionally, and by cognitively, I mean fatigue. When you're trading high volume like that and high trading volume, you can't stay focused for long periods of time. So that's what I was doing. And, I just noticed, fatigue. I mean, you don't have to make a lot of errors when you're doing that. So anyway, this is resistance, right? So this is the retail price. We can rotate. We can still come down here or come out the top. So I don't have an opinion because my opinion isn't worth anything. What I know is this is too high. I know this is the retail price. I know if I don't come out over here, I can come here. If I take these guys out, I've got the VWAP in the mid and this. That's what I know. I cannot predict what will happen. Now we're caught up. I'm going to come up for oxygen. And I want to remind you guys, there is something special going on. I'm just going to flash this on the screen. Post your questions. and I'll be right with you. Thanks for your patience, and thanks for visiting the Trader Lab. If you're in YouTube, by the way, please give a like. Helps. This is pretty cool. Starting October 29th, you'd be I believe it's $1 million SIM account. You need to activate and install Bookmap for desktop. There's no cost for that. And the winner will get, and don't hold me to this because you can go here and look at it and get all the thing, but you can get a year of Global Plus. That's all the bells and whistles. The Stop and Iceberg, or MBO bundle it's called, add-on, plus $1,000 cash prize, which is pretty cool. Nobody ever offered me $1,000 prize. And there's no risk here for you guys. It's going to be in a SIM account. Is that cool? That's open to everybody. And you can use the link in the bottom of YouTube if you want to go, and it's www.competitionbookmap.com, or just go to bookmap.com and you'll see it. The other thing is, we're having a institutional trader series next week, and these, you might know some of these guys, prop trader, Al V, hedge fund manager. I know a bunch of these guys, and you don't want to miss this. You're going to get some different insight that most retail traders are never exposed to. So don't miss that. You don't. All you have to do to get access to this, and it's in Discord only, is use the link in the bottom of YouTube. You come to the Trader Lab. You need to confirm your Discord email so you're not a spammer or a bot or one of those things. You understand that. So that's all you got to do. And then you can also visit the Bookmap Discord Trader Lab community, download the 60 PDFs of structured trades that I share. And in addition, when you are a subscriber, whether it's the digital version or otherwise, you can join the beta program. There's new tools always being developed. There's the Blue Jacket, which is basically, the Blue Jacket is coaching and mentoring. It's for Bookmap subscribers. Don't forget, if you have the free digital version, you're a subscriber. And then the Bookmap Academy. So there's a lot here for you. There is no cost. All it takes is your desire to get better. And I think as traders, we're always trying to get better. But don't miss this. $1 million SIM account. Trade your brains out. And possibility of free Global Plus, the high tier Bookmap tool with MBO bundle, 1 year of each, plus $1,000 cash prize. You don't want to miss that. At least they had it when I was trading. And now in the Trader Lab, this is what the 60 PDFs of structured trades look like. You can download these as well as a library of webinars that are in the Trader Lab. So you can kind of get, and a community, and there's no cost for that, but you do have to confirm your Discord, and then you can take advantage of all the education that's available in the Discord server. And remember, if you're a subscriber, you also get subscriber exclusive education. Anyway, so much for that, but I wanted to make sure you don't miss out. This institutional thing is a special event, and it's probably not going to be available to non-subscribers or non-members of the Bookmap Discord community, and of course Trader Lab participants. So let's look at our trades here. So remember, we had the IBF. This transitions up. It suggests this is too low. That takes the IB short off the table. If you took the IBF, the worst that's going to happen to you is you're going to get scratch the trade. I'm okay with scratching trades. It's kind of like buying a ticket to ride. You know, you get risk neutral, and that's part of the statistics you have to vet. Just so you know. Let me take a look up at your questions. Thanks for your patience. Yeah, Bull Bear Company, absolutely. But if you don't understand how it works, it's a waste of time. Right now, we are in real time. And if you come to the Bookmap Discord Trader Lab community, there's 5 hours streams, up to 5 hours of real-time narration. There's tons of that. But the purpose of this stream is to help traders understand how the market works. And the basis of how the market works is the behavior and what this means. Because if any trader cannot learn a process that has a statistical edge. And that's what the purpose of the stream is, to show you what most other retail traders don't understand and never will, because they're trying to solve the issue with indicators in a random environment and trying to curve fit. And that's what most of us do in our development. Of course, everyone can be the exception, but the probabilities of retail traders having any kind of sustainability in this business is dismal at best. And I think we all know the failure rate is huge. So the other part of this is why. Well, the why is because traders go down a path believing it's the right indicator mix, the right time frames. But when you're in a random environment, you're always chasing the market from behind, trying to fix it, right? Make it better. And we all have winning trades, because anybody can have a winning trade. It's just like in Vegas, any gambler can win. But the house extracts the dollars from the gambler. So the Trader Lab is about understanding market mechanics, how it works, why it does what it does in a random environment, and then only interacting when you have a statistical edge. The statistical edge comes out of the structured trades. That's why this was a short when we came under here. The long, the target was here and here, and this still is a target. Are we going to get there? Who knows? Not my job. So yeah, this is the hard right edge. But I think if you want to see a lot of real-time narration, you should go to the Bookmap Discord Trader Lab, because there's a library of webinars, and some of them, like I say, are almost 5 hours of real-time narration, the full day, going through FOMC, going through transitions from directional to rotational trading and back. That's also market mechanics, and that's also narrated. I always start the stream laying a foundation, because if you don't have a foundation, then, and I don't mean you individually, I'm saying all of us, if we don't anticipate what might happen, then we're just playing a video game. And that's okay, but I think it's better, if you're going to gamble, go to the casino, get the cocktails, ticket to the buffet, that kind of thing, because there's no edge doing that over time. The goal of the Trader Lab is to help traders create careers. And that is what the Trader Lab is for. That's the mission, and that's what we're doing. Not everybody can do that, and there's a lot of reasons traders don't succeed, and it has nothing to do with where you go or what you do. It has to do with discipline, emotional triggers, not doing the work, being overwhelmed by FOMO because we can't wait to actually find out where our edge lies. We just want to click the mouse, and we're under control by our chemicals, our dopamine and hormones and all this other stuff, fight and flight. And most traders underestimate the real challenge in the business. My personal belief is anybody can learn to trade in Trader Lab if they do the work, because the job of a trader is not to play a game, but to wait for the trades to come to them that have an edge. And then either you get involved when it comes to your location, like this short, or you don't. And does the trade succeed? Well, either it does or doesn't. It's a random distribution of outcomes. So we still have this. So the last long I had before I started the stream was the 59-ish, wherever that was. I think it might have been 10, 12. Yeah, this. So this was my long, and my last runner, I got taken out of, scratched. So, all right, here. I can't put a trade on while I'm streaming. I've tried that in the past, and I can't multitask because I have to be 150% here, which I can't do while I'm doing this. So if I got taken out of the trade, which I would, then this, once I come under here, this is called mean reversion. This, once I come under and this shifts up, I know now this is too low. Then I'm looking for it to come out to get long again. If I come back above this, where the sellers were, and there's my buyer, very aggressive, where am I again? Here's my micro high. This is a trigger right here. Let me show it. Here, let's look at this. Everything works with consolidations in all time frames and fractals. So this here like this. Chop, 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 break low. It's resistance. There it is. Break low. Chop, chop, break low, going to zero. This shifts up. This is the high volume. This is now the new retail price. If we're going to go down, we've got to come off of here to get here. We do the opposite. What is that saying? It is saying these passive buyers here are in control. When the market rotated down, which was the last shot to get to the target, the extended target down here, and the buyers took over, then this now is your high volume, break high, back over the 59, and then you got this, don't forget. Break high, pull back here. Now you have an option. You're back above the 59. There's your trigger. Here's your test. Now let's assume you don't get long here. You come back above here. This is another trade in Trader Lab. It's called IB continuation trade. Now, the way it works, first of all, you know that this is too low, and you know this is too low. And we break above this. This is your support. This is your support. If we pull back here, and what I would like to do is if I can get this before I get this, because I have a high probability. Remember, that was the target for the long from 5,900, the last one from 10:12 a.m. So right now, I don't have an entry here. I need a retracement. Now, the other part of this says this is a target also, and this, and who knows about this. But we do have a high probability of taking out either yesterday's high or low. Remember the basis of the short this morning. So we might take this out, or we're going to have an inside day, right? So that's that. That's what you got. That's as far as this goes. And if there's no pullback here or test, and this statistic is filled, I'm going to say there's a possibility that I might be done. Me, not you, me. And let's look. This is too high. This was the retail price. We also know there's buy stops at the high of the day. If I come up here, my probability is to take this out, and then I got this as resistance. So this is kind of my area now to be working. So the only way I'm going to get long, no, not the only way, but let's just say for a structured trade, is going to be coming back into this. So that's current. Havish Trades, hi. The PDFs are in the Bookmap Discord, Trader Lab. There's a link in the bottom of YouTube if you're inclined. And there's no cost, of course, to do that. How are we doing in Discord? Okay, I don't see any questions coming from the Trader Lab. I guess the Trader Lab is pretty well educated. How about YouTube? How are we doing over there? Please give a like down below if you're getting something from this. You know, every day is different. Every day offers different things. Let's look at what we know here. Sellers were here. The passive side absorbed these guys. That's why you get this. Buyers are here. Buyers are here. Sellers are here. Here. We're looking for a long, but we want a pullback. I'd like to see buyers, passive, buyers, 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 buyers. Sellers are here. Buyers are here. Buyers are here. I still don't have a trade that I can get into here for me. Going for this, going for that. And we got to clear these guys. So stops are here. That puts this on the table. And then this. So we'll see what it does. So for me, I need a pullback to here. Because my buyers are here. Now, buyers are also here, so they're being pretty aggressive, but I can't enter this. I can, but my stop then needs to be like under here. So if I get long here, I'm kind of chasing it a bit. So I don't do that. I just wait. I'm not compelled. Trading almost 45 years, I just found over time, if I'm in a FOMO thing, that doesn't pay. It might pay this one trade, but then I've gotten rewarded for lack of discipline. So I just don't take the trade. That's just me. You guys can. I don't. I used to. Everything you do, I've done. And I've unfortunately had more time to do more. And a lot of it not good, which I didn't know at the time because I didn't understand trading. So remember, target, and then out the top maybe. So we'll see what it does. But again, I have no trade unless I'm playing the FOMO card. And if I did take a long here, this is vulnerable to a retracement. The better trade for me, only talking me, not a recommendation, is for it to test this. So I'm going to get rid of this. Remove some of the debris. So we got volume is there. That's my support. I'm going to get rid of this one. Don't need it. What? A. So there's my volume. There's my test of this microstructure. I cannot do this, okay? And then I'm going for this and north. So I'm just saying, now I'm not saying you can't do it. I'm saying for the stream here, I'm very much about discipline. So I don't want to show things that I don't think are good behaviors. This is your support. The better trade for me is to come under here, take out stops, test this, get long, and then go up. So that's basically it for me. So I don't have an entry there unless I want to be entering here and my risk is out here. So that's a couple points. I don't know. It's up to you. Questions? Tony, I don't have a long here. Well, actually, this can be a long here against this. But the risk for me, the risk is down to here. The entry would be here. I will not take this trade, me, because I have the overnight high and I have this. So what can happen here is I can take this and then rotate. So I don't have a trade. But this is also, so you have a long here, which it didn't pull back to. You know, you could, in theory, and I'm only going to say theory, take a long here, but no. I was in real time, so for me, the pullback is to here, right? There. It didn't quite get there. This is chasing. The other part of this is the pullback to here. Because this is your retail price. Remember, if I get above this price, then it's too low. It sets up back to here and maybe out the high of the day, from yesterday. I don't know. Not my thing. When I say I don't know, it's really who knows. I don't know. So this could have been a long. I didn't notice this over here. This is why I can't trade and stream, because keeping these things top of mind, especially when I'm talking like this and trying to explain things, I don't multitask well. Just my own thing. And I will tell you, I think I multitasked better, 10 years ago. But it's harder. And normally when I'm trading, I'm 150% be here now, not, looking at chats and do that. When I'm trading, when I'm looking to initiate position, I don't look at anything. If I get a position on and I'm managing the trade, then I can post and, do other things. But when I'm going to initiate, I got to be 150% in here. Otherwise, I miss things. I just am too busy, and my mind doesn't even register. In my trading platform, these have alerts and things on them. Little bells go off, keep me, So I would be more conscious of them. but I won't put alerts on here because you'll hear them blasting and you wouldn't like that. Anyway, I hope that gives you an idea. So I missed this. Okay, we'll call it a trader error. Now, if it came down to here, that I was looking for. I was not looking for this. Only because I was looking at this. There it is. So, Tony, I don't have a long now. Oh, good one, Sorensen. Sorensen in the Bookmap Discord Trader Lab put some statistics up, and there's about an 84% probability, right, to take out the previous high or low, and we have 1.5 times the IB high or IB low. It's another statistic. There's a whole bunch of statistics in the Trader Lab that would align. Is that right, Sorensen? They align with the high. So that sets up the possibility to take this out. I think that's what you're saying. Now, let's keep an eye on things. Remember the targeting. This could have been a long. I slept through it. This is the next target. We get above here. This acts similarly to this. These are multiple time frame levels. So the market is a shopping experience, remember. So in microstructure, this is the high volume. As we go up in time frames, this is high volume. So the market is attracted to these things. So high volume is here, break high, test it, too low. We come up here. What about this one? It was too high before. Remember, we rotated down. Test it. I'm not paying that. Rotated down. Then we come back up here. Get above it. What then? Either pull back here, get through it, or just pull back here, go to here. If I get through here, it opens up the door. This is now resistance. So this is how the auction works. Now, the other joy of the whole thing is we don't know what will happen at these levels. What I do is I use them for targets. So if I had gotten, let's say the long we were talking about, let's say this came down here, I'd be targeting this. I'd be watching this. And then, because I want to see happen here is the sellers are here, and right now buyers are here, and right here, if I clear this seller was absorbed. But I got to get over the sellers here. That's the icebergs. Passive side is here. Passive buyers are here. I clear this. I'm breaking out of this micro volume. I'm going to put a little line up here so you can kind of see the structure. So what this is, sellers are there. And where's the buyers? Right now, they're here. These sellers, which are sell stops and maybe somebody fading, who knows, they got absorbed by the buyers. So now the sellers are here. There's the iceberg. If I can come above this buyer and stay above these sellers, then I extend. If I can't get above here because the sellers are here, passive side, you can't see them. Right here, if the sellers get below this guy, we're coming down. If the buyers who were here and consume this seller are now back here and I squeeze out, then you're going to see it continue higher. So when I'm looking at this and managing my trade, I know because I'm looking at order flow and I'm overlaying order flow with higher time frame, as you think of them, structures and statistics. This is kind of a way to think about how you build a trading business because we're not in the prediction business. We're in the business of maybe. So when you operate in a random, uncertain environment, you really just have to be flexible and look for clues of market behavior. If we think the market's going up because we failed to take out yesterday's low, and while we might not take out yesterday's high, the all-time high, we might. In the meantime, for that to happen, I got to hold this and come up above here. So if I was long, this is a trade management opportunity right here. Your stop would be here or here. And then once we break above here, your stop is under here. And you have to vet these. These are just ideas. Now let's do another little piece here for you to see this. And if you have further questions, drop them in here. Because I am, well, what did I do? Now what I was trying to do. Hold on a second. So what this shows me, this is a consolidation, and you could see the consolidation here. Inside of it is the high volume. So it's chop, 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 chop. Now, right here is retail. Over here, I had buyers. So I had buyers there, buyers here, passive. You can't see them. I mean, I can see the aggressors, but we could just do that too. What happened here? Buyers. What's over here? Buyers, 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 passive, aggressors. I get the counter rotation. Now I know my sellers are there. I know my buyers were there. I get my seller here. Right here, down to zero, right? What happens though? My buyers absorb this guy and I come up here. So my sellers are here. My buyers now are here. I break out. I'm going up. If I rotate here, this is still my support and it's right there. So what these are, when you're seeing these, I call them fractals. So as the market auctions, it goes, oh, what's too high, what's too low, and then there's the volume. If this becomes too low, I leave it. And then I come to another location and do the same thing. So this is what the fractals are. So depending on my plan, I can use any of these as locations to enter, like this. Right here. This is the one I missed. Let me show it to you so you could kind of see how how it would work. Does this look familiar? Does this look familiar? Seller, seller, buyer. Seller, buyer. Break high, pull back. Here, break high. Now we didn't get back here. Up to you. But it's a compound situation here because when we broke here, this is too low. This is support. Here, it's what's going on? Well, I know we fail under here. If I break high, I can be long or not. I'm not saying anybody should get long. I'm saying is you can begin to read these and understand the story. I don't use any indicators. Now I have selling right here, absorption, icebergs, and this is the absorption detector. Now we want to see what kind of counter rotation we might get. Any final questions? I got about 7 minutes. I hope you're getting something from this. No, sorry, so that's okay. I was just commenting on the stats you posted up there. Thanks for doing that. Sorensen in the Bookmap Discord Trader Lab community is statistically suggesting, now a statistic is a maybe at best, this statistics, and remember, the probability of taking out yesterday's high or low, more or less, is almost about 82%-ish. So, give or take a few points depending how you slice the enchilada, but it's over 80%. So if you knew you had and that's why the shorts this morning, over an 80% probability of taking out yesterday's low. That's why we were short biased, not necessarily, but we started out on the shorts and that was the targeting. To get the low, yesterday's low, trap the shorts, and then come back in this direction. So that was the trade plan for today. So it was actually a pretty good plan, I think. It's just, do you get locations to execute? That's it. And if you don't have them, you don't have a trade. That might be hard for some of you. Oh, it's going up. How can I get in? You know how you get in? You think longevity, you don't think dopamine and emotional triggers, fear of missing out. That's what takes traders out of the business. And we all think it's going to be an exception. Oh, not me. No, that's everybody. That's why anyone you know, and I've been doing this 45 years, I can't tell you how many traders I've known who had all the potential in the world, but they couldn't discipline themselves They didn't set loss limits, so they would stop, and then they wanted to make it back, and they blow their accounts up. Then they're depressed. It's like a vicious cycle. We need to understand why developing traders fail. And emotionally, when you're in the heat of this and the chemicals are in your brain, and you need to understand how your mind works and how the chemicals in your brain impact you, because all of a sudden you are driving under the influence. You wouldn't drive a car, hopefully, when you're drunk. You wouldn't put your family in the car. But yet, when you're trading, you're actually in a similar condition. You're under the influence of chemicals. And rational thought, in spite of intentions, goes right out the window. It's no different than saying, if I have too much to drink, I'll give the keys to somebody else. And then after drinking, you say, I can drive, I'm okay. And then disaster. That happens, unfortunately, right here in trading. So over time, the viewpoint I've found of building a business is to not look at moment to moment, but to look at it and not based on P&L. We all have losing days. We all hit loss limits. It's just part of the business. The thing is, you stay in the business by following your trade plan, not making it up, not chasing. And this is, I think, the hardest part. I believe anyone who comes to Trader Lab can learn how to trade. It does require work because you've got to find the rotations or the fractals that you want to operate in. I tend to go for larger rotations because it pays for me. So if I get a 20, 30 point, whatever it is, or 10, whatever it offers, the market offers, I don't trade. I don't risk 2 points or 3 points to make 3 points or 4 points. It just doesn't work mathematically. So what I found is, in the Trader Lab, I talk about a minimum 2-lot configuration. Job of the first one is to get risk neutral, and then you manage the runner, or you just trade to fixed targets that have statistical probabilities. One last reminder, if you're interested in the Trader Lab, there's a link in the bottom of YouTube. There's no cost. You can come to Trader Lab. It's a community of like-minded traders who've come together, all ranges of experience and methodology, come together to leverage our collective experience so we all get better. You're never done in this business. I'm going on 45 years. I'm still researching, tweaking, tuning, thinking, living, breathing, looking forward to every day, and accepting that I can't predict anything. And if you're doing this long enough, I've traded through Falkland Islands, Desert Storm, 9/11, currency crises. I can go on and on because I can't even remember. Hedge fund collapses, all kinds of stuff. And the thing, and 1,000-point drop, and all kinds of stuff. Been there, done that. Do you think you can predict something? I'm going to suggest you're really better off accepting that you have nothing that you can control except what you do. And even then, you can't control events. The only way you can measure yourself and have an opportunity to stay in this business is to manage your risk and accept the random outcome. And that's how you grade yourself. And I hope that makes sense to you. Thanks for visiting Trader Lab. Please give a thumb up. By the way, this stream will be available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, and give some thought. By the way, remember, where's our support? We have support here, high volume. We've got support over here, and we have this. So there's a couple possibilities. This can be a continuation long, but it also can be a mean reversion short back to here. Think about it, and let's see what happens. Thanks for visiting Trader Lab, guys. And if you're in YouTube, use the link in the bottom of YouTube. Don't forget about the special institutional trader webinars that'll be taking place next week. You can click that link in the bottom of YouTube, access to Trader Lab, no cost. And also go to bookmap.com. We are having a trading competition, $1 million SIM account. You can win a full year of Global Plus the MBO package, 1 year, and $1,000 cash prize. And there's other prizes also. I think it's a nice way to say strut your stuff. Thanks, guys. Don't forget to give a thumb up in YouTube. In Trader Lab, I'll be there in a little bit to continue the day with you. And notice our test. Gotta go. Thanks again, guys. And thanks for visiting the Trader Lab today, and have a great weekend.